You wouldn't believe how many times I've been asked to do a video on iQiyi. It's a brand new stock that's been on the market for just a few months now, and there's just so much hype around the stock. So today what we're going to do is we're going to do a deep dive analysis on iQiyi. And remember, if you like these kind of videos, hit that subscribe button down below to support the channel. But either way, let's go. Hey guys, welcome back to another video. This has been one that's been requested, I don't even know how many, countless number of times. And I figured, okay, you know what, I'm gonna sit down, do some research on this company, and provide you guys with the facts here so you can figure out if it's a good investment or not for you. So today we're gonna be talking about iQiyi, or the company's actual name is iQiyi. And it's a Chinese company by the name, you can tell. And we're going to get into some facts about the company, their competition, analysts, some information on their fundamentals. But let's get going. So iQiyi, or iQiyi, like I just mentioned, recently had their IPO on the NASDAQ actually, back in March. And since then, it's been a very hyped stock. In fact, it's probably one of the most requested stocks I've been asked to do a video on this channel. So if you don't know what this company does, they're pretty much a Chinese online video platform, and they initially launched their service back in 2010. And people often refer to the stock as the Netflix of China. So you can think of it as a similar service to Netflix in China. So it's kind of like video on demand kind of service. Now iQiyi actually has some pretty impressive stats with the user base that it has. So one thing that actually stood off to me right off the bat was that its users actually spend 6 billion hours on the platform every single month. And another impressive stat is that they have over 500 million, that's 500 million active users on this service every single month. So the biggest news that really came out before this company went public, and a lot of reasons why people like investing in this company, is that they actually struck a licensing deal with Netflix to stream Netflix original content on their platform. So the way that this company, iQiyi, makes money really, you can see on the chart here on the right hand side, is there's a few different sectors where they make up majority of their money, and then they have a few other little things that bring in a little bit more revenue. You can see here that actually advertising is the chunk of their revenue, and membership services very closely behind here. They also have other revenue sources that you can see here from the other section, where they get revenue from things like live broadcasting, online games, IP licensing, etc. So there's a lot of different revenue streams for this company, which is a good thing to see, especially since what their main focus here is online video. So getting into some competition here, this is where things get a little more interesting with iQiyi. So iQiyi has some serious competitors really in China. Although Netflix isn't in China, they're not allowed to be in China. There's other companies that compete for this market share. So if we look at North America and how Netflix structures its business and the competitors to Netflix, we can really see that Hulu, YouTube Premium, Amazon Video, and a bunch of other services are pretty much direct competitors to Netflix. But Netflix really has a good hold on the market. Now iQiyi, on the other hand, has some really serious competitors, in my opinion, that have very close market share to what it currently has. And these competitors are Youku and Tencent Video. Youku is owned by Alibaba actually, and Tencent Video is of course owned by Tencent. So Tencent is a threat here in my opinion because they have money to spend and to take away market share from iQiyi pretty much across the board. They just have more money than iQiyi. And although iQiyi is currently the leader according to this chart right here, I suspect over the next few years that this gap is going to start decreasing and closing in closer and closer and closer as Tencent puts more money into this part of their business. Now Tencent Video, if you look at their stats, which they're also very impressive, they have over 500 million active monthly users as well, and they have 63 million active subscribers currently. So this is not a small platform by any means, and it's definitely a serious threat to iQiyi in my opinion. Now the second one, which is a bit smaller, is Youku. I'm sure I'm not pronouncing that correctly, but Youku is pretty much a smaller platform, similar service, owned by Alibaba, and they currently have 150 million daily active users. And although it's smaller than Tencent Video and iQiyi, they again have a lot of money from Alibaba to actually funnel into this and grow it out if they wanted to do. So when we look at competition here, what I see is that this space is getting pretty competitive. You have two massive companies that I'm personally both invested in, And both of these companies have a lot of money behind them to put into this to compete with iQiyi. So that's kind of a big red flag that stands out right away to me when we look at competition to iQiyi. So since its IPO, initial public offering 4 months ago, iQiyi has had just a couple of analysts really come out here. We've had 3 analysts specifically. 2 of them have been bullish on the stock. 1 of them is neutral, with 0 are bearish, of course. And being that it's fairly new, I would assume that over the next year or so is when we'll see a lot more analysts come into the stock. Once they see a little bit more of the trajectory that their company is growing at and they release earning numbers, that's when I think some of the bigger analysts will come in and initiate coverage on the stock. But as of right now, based on these 3 analysts, we have an average price of around $22 for a target, which is actually around 25% lower where the stock price is today, which is around $30 or so. That's something to keep in mind if you do want to invest in the stock. But again, take analysts with a grain of salt. So the technicals on iQiyi, what I would say here is don't look too much into this. Don't spend too much time on this. Being that it's fairly new on the stock market, in the States at least, there isn't a lot of technical data to really go on. You can see here we IPO'd back at the end of March, and since then we've kind of been moving upwards, but recently have been seeing some downward trends. So since its IPO, it's really hit a peak of around $46, and currently we're at $30, so there's been a significant pullback from its peak. But again, like I said, it's too early to really use technical analysis on this. I really like to wait maybe about a year or so it can develop some patterns, develop some moving averages. You can see there's some of the moving averages starting to kind of show up in this chart here, but it's still not enough information to base a trade off of. Now, if we look at fundamentals, things just keep getting worse in my opinion. So iQiyi does not have a current PE. They do not have a forward PE. It's because they're not profitable and not expected to be profitable in the next 12 months. Despite this though, they have a current market cap of around $23 billion, which is, again, that's a different sort of mindset for investors that invest in this company. I can't really say that I agree with that market cap, but that's what it is right now. Now, again, if we look at the competition, Alibaba and Tencent mainly, who own Youku and Tencent Video, of course, respectively, they have forward PEs of 23 and 28, and they're both very profitable companies. So that's, again, something to keep in mind if you do choose to invest in iQiyi. These other competitors have a lot of money behind them to put into this. So of course, as expected, iQiyi does not pay out a dividend, and I don't really think this is going to change anytime soon. If they do become profitable in the near future, that'd be great, but they're going to be investing all of that back into the business. So don't really hold the stock and expect dividends anytime soon. Balance sheet surprisingly wasn't too bad. So their cash and investments comes in at around $314 million or so. Their debt's around $146 million, so the cash to debt ratio is just over a 2, which is pretty good considering the fact that this is a fairly new company. But the problem that we've talked about and the issue that I have with this is that they're burning through a lot of capital every single quarter, every single year, and this cash to debt ratio of 2 is slowly going to keep decreasing over time, in my opinion. And we're soon going to get to a 1 or below cash to debt ratio, in which case I think a lot of investors are going to start really thinking twice about the stock and start selling off the stock. So in my opinion, they really need to turn a profit soon to keep investors interested. Right now, they're pretty healthy because they do have enough cash on hand to offset that debt. But like we said, they're losing a lot of money, so they need to have that cash just in case. Now next, we're going to look at the numbers and growth year over year. There's not too much information out here on iQiyi yet. You can see that it's 2015, 2016, 2017 is the only data that's really available out there. And the reason is because it's a fairly new company and it's fairly recently IPO'd as well. So you really want to wait a few years if you want to have this as a long-term investment. Sure, you might miss out on massive gains, but it's really hard to see where a company is going over just a 3-year span. But anyways, if we do look at a 3-year span here, we can see that revenue has been increasing pretty well. We have green across the board across the 2 years that we've compared here. And it's been a significant increase year over year. So double, even triple digit growth year over year. However, that's where the kind of good stuff ends, because every other metric we look at has negatives. We have negative operating income, we have negative net income, both of which show us how profitable a company is. Of course, we know that iQiyi is not profitable, so they're actually losing money. So in this case, it's a little concerning to see here how unprofitable they're becoming. They're actually going down double digits year over year. And on top of that, to add to this, their capital spending has been going up almost triple digits year over year. So they're spending a lot of money. And again, this is going to eat into that cash that they have on hand. So I would, again, be very concerned as an investor as to how this company is going to keep moving in this direction and still have enough money to put into the business and keep growing. Again, that's something we'll have to wait and see. If they can figure out a way to turn a profit soon, this will definitely help with offsetting some of these losses. So is iQiyi a buy? Well, iQiyi has really picked up a lot of popularity since its IPO, and that can be really seen by the volatility of the stock. I mean, on this channel, I've been asked about iQiyi tens of times, if not hundreds of times. Almost every video I make, I've been asked, can you do a video on iQiyi? What are your thoughts on iQiyi? Would you invest in iQiyi? Figured, you know what, you guys are asking for it, I'm going to make a video, give you the facts, give you my opinion on it, which I'll get to in a second, and you can make a decision then on your own if this is a stock you want to invest in. So in my opinion, the fundamentals of the company are good, but that's only from a revenue perspective. The spending, the losses, everything else is a negative. And of course, we have a lot of competition in this space, which is also another big negative for me. What I particularly don't like is that they have no projected path for profitability yet. And as an investor in a company, I want to see this company become profitable, of course. I want to see it make money, and then in turn, I would make money from this. And right now, iQiyi doesn't really show me a direction or a path that it can get to get to that next level. But that being said, there is a lot of promise, there's a lot of speculation on the stock. A lot of people are investing on speculation, especially with the whole Netflix agreement that they had where they're going to stream some Netflix original shows. That could be a huge pop for the stock. Maybe they'll get even more subscribers in China from the stock from that. We'll have to wait and see to find out. But like I said, Alibaba and Tencent have a lot of money on hand. And if they really wanted to, they could work out a deal with Netflix as well and kind of outbid what iQiyi has, because these guys have a lot more cash. So that's something to keep an eye out for. It's something that I'd personally be concerned about if I was an investor. So what I would say really in conclusion is that although there could be a lot of upside in the stock could double, triple, quadruple in the next few years. That's all based on speculation. And in my personal opinion, I think that's too high of a risk for me personally to put into the stock. I don't see that it's going to become profitable. I don't see how they're going to become profitable, and there's just too much competition in this space. So as of right now, based on the information that I've seen and the information that I have, I would say that iQiyi is actually a neutral rating for me. I wouldn't put a sell on the stock because it has potential. It's not a company that I think will fail for sure. It has potential to kind of get to that next level. It just needs to figure out how it can do that while being profitable. So there you guys have it. You've asked me plenty of times for this video and my thoughts on iQiyi, and now you finally have that. Let me know in the comment section down below if you are invested in iQiyi. If you're not, let me know why not. But either way, guys, thank you so much for watching, and I'll see you in the next one. Don't forget to invest positive.